It's the earnings and the last few days of earnings, and let's welcome in the management at Zee now. Rohit Gupta, CFO at Zee Limited, is now with us. Sir, can you just talk about inflationary pressure on advertising, hurting ad revenues, that are larger corporations are looking to cut ad rates when growth rate will come back, only then they would go to the pre-COVID levels. Can you just talk about that first?
Let me start by saying that, despite all the headwinds we faced in FY22, overall it was a healthy year for Zee Entertainment, and we had marked recovery across all the segments. In our ad revenue as well, our revenue grew by 17.3%. And for the quarter four, it was flat Y on Y, primarily because we had softer performance in certain key markets. And also, there are some inflationary environment, as you are rightly saying. So currently, we are seeing that there is sharp rise in inflation coupled with higher input cost and the ongoing conflict between Ukraine and Russia, which is resulting in disruption in global supply chain, and that is impacting the marketing spend by FMCG segments. Having said that, we are tracking the overall ad industry, growth, and we are very much in line with that. We are actually, going to be, as the ad industry, AdX will grow, we will see similar kind of growth for Zee Entertainment as well.
Okay, so that point is taken, but have margins been impacted due to higher programming and operating costs? And what has been the investment in ZEE5, the new launches there, and what's the programming cost been in Q4?
So see, we have continued to invest in the enhancement of our capabilities across content, digital, and technology to better serve our customers. We continue to be India's strong, number two channel. We have a 17.1% share, and we have gained share in some of the markets like Zee TV, Telugu, etc. But like I said, there has been certain soft performance as well. But our investments, this was the year of investment that we had last year because of COVID, as this was highly impacted by COVID. The content investments were much lower. So overall, if you see, there is an impact on the margins that we see, but that is primarily because we continue to invest in content, technology, and marketing. We have seen that this investment is also giving us results. So if you see our digital performance, overall MAUs have grown to 104.8 million and DAUs at 10.5 million. We also have a healthy growth in our watch time to 214 minutes. So MAU growth is about 44%, and our overall revenue has grown by 31%. So we're very satisfied with our ZEE5 performance, and that has been on the back of all the investments that we have done in content and technology, and of course we are improving our user experience as well. So quite frankly, we expect that these investments will continue in FY23 and 23 as well.
Can you take us through the long-term vision for the merger with Sony? How would you plan to leverage the larger opportunity?
So, right now, let me just say that, our approval process is on. While we have already applied, to both the stock exchanges, BSE and NSE, and, we have applied to Competition Commission. We made a pre-filing in March, and we have also done a filing in April. We are still awaiting approvals on that. So, at this point of time, I'm not going to comment on the merged entity, and that's really something which once the merger really happens, the board of the merged entity will be really looking at. But what I will do, I'll talk to you about is FY23 for Zee, and we are very excited about the growth opportunities ahead of us.
Okay, Rohit, we'll let you go on that note. Thank you so much for making time and speaking with us today.